Welcome back, guys. Welcome back. Today is definitely going to be an interesting conversation on this stream because I'm not just going to pop open the public portfolio yet, but what I made for you guys, I want to talk to you guys about something that I've been chatting with a few people today, family members, close people within my circle, and it made me think that I want to bring this to your attention because I believe a lot of people that have been connecting with me are mentioning that it's so hard to find and land a primary day job, right? And I only realize that it's going to become even harder. So if you're in your 20s and you have a job, hats off to you. You're doing something great. You know, try to stay there, grow up the corporate ladder, earn how much you can, but also to invest, right? Now, if you know anything about this segment on my channel, it's all about getting one's mindset straight, corrected, aligned with how to make money in today's world that we live in, and that's all about investing, right? And I'm just gonna keep it light and easy so everyone kind of understands what I'm trying to say. I'm not trying to scare anyone. Disclaimer: first of all, I'm not a financial certified advisor of any sort. I can't advise people what to buy, hold, or sell. What I can advise from my own experiences in life, this is what I'm sharing with you guys, right? Now, we all know of Amazon, Meta, even LinkedIn currently has been on a massive layoff. With AI and with quantum computers in the near future, and just we can just look at it, right? Some occupations that have been obsolete. When back then mode of vehicle transportation was horse carriages, cars came in with Ford and Henry the Ford, milkmen delivering physical milk bottles. I mean, half the world, or not half the world, but parts of the world, let's put it that way, aren't even drinking dairy because of whatever. So with science and computers and everything's changing, the way we are changing as well, right? The way we eat food, the way we take in knowledge. So what I'm trying to get at is basically the public portfolio. When I share it with you guys, and when I say that, yo, this is how a public portfolio looks today, is because when I started investing in 2015, it was a very different time to invest in. And it wasn't that too long ago, but it's obviously a long time, right? So if one had to start today, what would be the sectors to focus on? Because we all know 10, 20 years from now, that's basically a decade or 2 decades out, the world's going to change. Companies' brands are going to change. Um, so you want to be ready. I want to mention this example. I think it's Allbirds or something. They were in shoes or something. Look it up. Do your DD, your due diligence. But it's coming to mind right now while I'm talking to you guys. I think they've changed to Bird AI. So a company or brand, and if you know, just hit me up, correct me. But from what I recall, is that this company used to be in shoes or apparel or merchandise, physical, tangible merchandise, right? And now they're Bird AI. So if they can develop and evolve so quickly, because they're saying, okay, we see this is the growth in the future and whatever, right? That's how a portfolio should be future proofed. And we saw this when the pandemic happened, what stocks were popping. People were chasing Netflix stocks. I mean, the whole tech, first of all, took a dip. But if people bought tech during then, in my opinion, it's grown because I bought heavy in those dips, and all that in a private portfolio is cooking. So without further ado, let's get into it. Like I always say in my streams, just a guy in a hat, talks with me, Jeremy Waller. Open, easy talks. So the public portfolio, as you guys know, I use Robinhood. I'm not affiliated with Robinhood. My links are below if you guys want to use it. If you click on it, you get something free. I'll get something back. Again, if you sign up with Robinhood, usually don't butcher me, but I know that you won't get anything because once upon a time I signed on Robinhood, I didn't get jack. But when people use my link, they get something and I get something, and this testimony becomes a recent cousin of mine signed up and she got something and I got something. So welcome to the double up journey. The old corporate game is fractured. Today, we pull back the curtain on live compounding assets built specifically to survive the automated economy. Right. Without further ado, the layoff, the reality. No job is truly safe. Meta and LinkedIn, like I just said, thousands of coordination and middle management roles are vanished. Tech giants are executing major downsizing protocols. Amazon optimization, corporate headcounts are continuously reduced as workflows get centralized and automated. The imperative shift, trading raw labor time for a single salary, is a hazard. You must convert active capital into active investments. And what that means, guys, is that if you take, if you're at Meta and LinkedIn right now and you're working, and like we all know this, that at the end of the day, if we are working for an employer, we're just a number as an employee. We all know that if you look at companies like, let's look at, let's say we were a company that invented the typewriter, right? If we didn't evolve into the keyboard, how the keyboard is today, without a touchpad, without physical, like of course on our laptops we still have, but what I'm trying to say is that, like, if you look at your smartphone, the keyboard is not physical buttons, right? So you see how a business and how the concept of certain things have changed with time, right? They've evolved. And that's what I'm trying to say, right? If you're working today at a company and you can see that your job literally runs on the computer, sooner or later your the computer is going to take your job, because the computer will just program itself to do everything. So if you are like an analyst, a data entry, or whatever it is, right? You get the picture. I'm not trying to single out any person's occupation right now. That's not what my premises. My point I'm trying to make is that if you're at any job and your computer is doing, and you can't do your job without the computer, right? The computer is going to come for your job. And I'll get more into it when I share more with you what I've put together, and then you'll get a better, clearer image. So just let's move off. So this is the layoff reality. It's coming. Is companies literally are getting smarter because they want, as an investor, if you're buying into these companies and they're showing more profits, more margins, as an investor, right? We are making more bread, right? Do we feel bad about what's happening in reality? 100%. But if your money is working smartly for you, if you're switched on smartly, you're going to make money in the market, right? Okay. The next slide is the multiple streams mandate. Now, I'm a strong believer of this from a very young age. I always had more sources of income, whether I was DJing, whether I was helping my dad's business, my brother's business, whether I was also helping my friend, my neighbor at that time in Sharjah. That's where I used to live, in United Arab Emirates, close to Dubai. I was born there, and I lived in Dubai as well. I helped his dad, who was a dentist, to basically, like, he would drive me around when I was young. I would hop off in these areas in Jumeirah and drop off to all the dental clinic, as he was a dentist, all his whatever things that he was doing, right? Packages and whatever. So at a very young age, when I say young, I was doing these things from like 15, 16, 17, 18, and I still continue to like have multiple streams of income, because I know that a primary income, even when I worked in Dubai in my last job and my earlier jobs, I never had just one job or one primary income. My bosses knew what I was doing outside. As long as I was doing it outside of hours, they were good. So I always did several things, and I don't know if that's the entrepreneur in me or whatever, but that's how my mind works. I always have to do more. So relying entirely on a single employer means you are one quarterly earnings report away from zero income, right? Allowing active cash to sit rotting in a legacy bank account while inflation erodes your true buying power. And now, what that means is that there's two things we're talking about. One, I basically covered with you just now about don't rely on just one income. Try to do more, whether you have a hobby, try to monetize it, whether you're good at storytelling, get on YouTube, whatever it may be, just build and be consistent with it. But if you have money, and I always tell people, like, open a high yield saving account, you know, a HYSA or whatever you want to call it. Make sure that you have your emergency fund, whatever so your emergency fund is basically 3 to 6 months. You're great if you have 1 year of your rent, your loans, your bills, whatever. I would say 6 months minimum. Keep it ready and let it sit in a HYSA, which is basically earning anything. If you're getting, go with a bank so far or something like H. Again, I'm not affiliated with any of these companies. I use these companies personally. Um, use these banks because I think they give you more than 3.5%. And check online, do your DD, your diligence, and see what you're getting, right? And the best. 3.5 should be the minimum APY, annual percentage yield per year. And it's not much, but it gives you some growth at least, right? Some sort of thing. The public framework. What is this? Step one, secure reliable primary income source. Sell your time, secure job, and execute. Right? Step two, instantly routing a fixed percentage directly into a high growth futures compounding assets like Robinhood. Like my public portfolio, put your money to work. So if you have a budget in your emergency fund, create another budget recurring from your primary income, whether it's your 9 to 5 or whatever. Make sure that you're investing. So if it means like, I don't know, reducing your subscriptions, reduce going out, whatever. Like, I'm not using the word like take it out completely, reduce it, and take that reduction in cost because you know you're going to spend it already because you're wired that way, and just put it in 3 months, 6 months, 1 year, and let it grow. So recurring on a routine is a must because compounding takes time and years. If you're in your 20s and watching this, do it, right? Put your money in an ETF, an exchange traded fund. Put it in VO, VUG, VTI, Triple Q. Do your homework. Go online, go on Gemini, ChatGPT, Claude, whatever you use, and put in which is the best ETF that I need to start today in order to see money in 5 years, 10 years, and I'm going to put this money every week in SPMO, right? I show you guys the public portfolio after this, what ETFs as examples we are using, right? That's what you need to do ASAP, ASAP, right? And I'm saying this for your betterment. I wish someone told me this when I was starting at 2015 investing. I wish someone told me this in 2005. I wish someone told me this in 95. You see what I'm saying? That's how old I am. But I'm telling you this now, bro. You have a smartphone. Use it smartly. Make money with that device. And everyone can start small even. If it's even $10 a week, come on, guys. You have $10. You have $20. You have $30. You can. Just start it, bro. Next, let's get into this. Now, how would the public portfolio look like today? What companies do I buy besides ETFs, right? So, investing is versus saving. This is what I'm trying to get, right? This is not 2015, and that's the year I started investing. A decade ago, you could passively buy index funds and coast on slow general growth, right? The current landscape is radically different. We are investing for self betterment and dynamic future wealth. That means positioning capital into the tech fuel pillars changing the world. We all know AI is driving the growth in the market. I'm a crypto investor as well. I've reduced my crypto positions, taken a loss, and put it in the stock market. Why? Because I know the stock market is moving. I'm a business person, so at the end of the day, if I don't want to lose all my money, so I'll take my losses as a man and put it in a market that is booming. And that's what you would do in a business. I'm a businessman. So if a business is doing unwell, the market's down, I'm not going to close the business because there might be a future because we made good money in the past. But I reduce my positions and put it in the other business or the other department in that business that is creating more revenue, profit. You see what I'm saying? So that's what I'm doing with my crypto. That's a little thing that I'm just sharing with you guys. So you want to be where the market is moving. You want to be in the AI, the quantum computers, the space stocks, right? In these markets. Also have a diverse portfolio. Doesn't mean you go really heavy into all this. But as long as you're putting in ETFs and you're putting it in the future markets, when I say future market, in the sectors that are future proof, you're in these Nvidias. I'm not saying go out and buy today these companies, but what I'm trying to say, find the next best thing. Connect. If you have 5 or 10 people in your circle, message them and say, "Hey guys, random question, but we always chit chat and you always say I got you and I got you as well. Do you do any sort of investing?" And these are the people, if they reply back and say, "Yo, bro, like, why didn't you reach out earlier? You know, look at this company, look at this ETF, look at DRAM, DRAM, ticker symbol, you know." These are the people that you want to build because every decade I find myself a different version of myself. Now it's even fast forward, like every 1, 2 years, 3 years, my version is leveling up. That's because I'm in these rooms. Like my stream said yesterday, ever since I jumped off that plane last year in Dubai, skydive Dubai, I want to be in rooms with people that have also jumped off planes. So I'm learning from them because we're all leveling up way faster. That's just my story, right? My internal story. The transition to tech wealth. You start the public portfolio. I'm literally dedicating my time and effort into the public, not just for you guys, but for my own journal. Like, I want to take the public account to 100K. And I'm going to be on YouTube as God willingly. And that's my end goal. I wanted to go there, right? How am I doing it? Because I know tech's just, we have such an early stage of, I was just talking to my dad on the phone and I'm like, this tech's crazy. And I was talking to him because today is my grandfather's birthday, Sam Waller. So my dad's birthday. So happy birthday, God bless you. He's in heaven. Uh, he's also buried in Dubai. Uh, so just like my mom and like my aunt's birthday. So Sam Waller's daughter is also buried. His daughter-in-law is also buried there. Long story short, guys, I was telling my dad, like, imagine, right, like in the future, my dad's going to turn what 77 this year. I was telling him, like, like I watch stuff on, there's a show called Upload where you can upload your memory and download whatever, and my dad can coexist in my world still. I can talk to him. He can, it's kind of weird that movies are now becoming a reality, right? So I said maybe in the future, God willingly, I can do that. He's like, oh, that's crazy. I'm like, but would you wanna, if you had the tech back then, would you want to do that for your dad? And he probably say he hesitated to answer, but it made him think, right? So I know that the tech is going to grow. I want to be in these sectors now in the public portfolio that will take me and compound my investments into that. So make sure I'll pop into certain. I'm not going to today the public portfolio. I'm not going to go everything like I normally do with you guys. I'm going to hit topics and stocks that I bought in the public portfolio that is going to, in my opinion, take me to this growth, compounding growth in the public portfolio, right? So, what are the sector to targets to recap? Semiconductors, automation, engines, cyber infrastructure. So, semiconductors, the literal raw power backing the global compute race, hardware scale remains the ultimate bottleneck. What are semiconductors? Basically, like your Nvidias of the world, AMDs. It could also be Intel's, and even with Apple with their own Apple or silicon chips. You see what I'm saying? Those are the computer chips, if you want to call it, in our computers, in the tech that are running, right? The memory, because right now we're using AI, we're using chat, we're using Gemini, we're typing in, putting prompt, generate this. All these things are run by these other semiconductors and other infrastructure, energy, and everything. So automation engines backing the software frameworks, LLM, which is learning language models like your Geminis and chats, infrastructure and deep tech protocols driving job shifts. So do you want to invest in companies like that? Now, a company like this, you would want to invest in like Google, parent company, Alphabet. Google basically has all of these things, right? The Gemini is the LLM. They have Google phone. They YouTube. They tapped into it all these different things. Google One and their terabyte space, their Gmail, and the list goes on. So they already tapped in that world. Cyber infrastructure, that's just an example, right? So, cyber infrastructure, as networks expand and agent clusters run natively, protective security structures take massive priorities. So, cyber security companies you might want to look in. These are the examples that I'm showing, whether it's CrowdStrike or other security companies that I'm going to jump into right now as ETFs that we are investing in the public portfolio for you guys to know, right? The double up well peak. Our goal is the public portfolio at 100K. Now, I started this public portfolio not to overwhelm people with numbers. So we started small, but we're going to get there, guys. Transparent, aggressive target. Facts. I'm building this portfolio completely in public view on Robinhood. No hidden tricks, no secret balances. You will watch every deposit, every dividend pay, and every trade execution live on stream. This target is, even if it's not live on stream, I also go back. Like if I bought something on Friday and I've already done the stream on Monday, I show you my notifications in the app what I've bought, right? And if you guys know, you know, like I'm really transparent with it, from red flags to green flags, what my losses are, what my losses on. This target is designed to show you that a discipline, with discipline, primary active jobs, and structured modern positioning, hitting major thresholds in your 20s or 30s, or even in your 40s, 50s, whatever, whenever, if you're watching this, it's absolutely achievable, obviously, right? Depending what you put in your sovereign blueprint. So maximize your active source. So if you have a primary job, a primary income source, make that your 0 to 1 mission today. Sell your skills, get jobs, secure cash reserves. So if you have any passions, turn it into hobbies, turn it into whatever, monetize them. Whether it's talking to a camera, whether it's not, whether it's getting a DJ gig, whether it's being an MC, bartend, Uber, DoorDash, the list goes on. You choose what you need to do, right? One of my cousins sells shells. She's decorates. She knows who she. Her name is Nino. You can look her up online. She sells oyster shells. She makes them into crosses and great. Like I don't want to get too much into her biz, but look her up and she sells these things online, right? All her passion that she does, all her hobbies, she tries to monetize it. That's not her end goal, but that's a goal as well, right? So she can invest more, right, into the market. Having more, you can do more things with your money. Build and invest in public. Share your insights, talk about your target picks, create transparency around your finances, holding yourself accountable, building elite money habits. And that's what I'm doing with you guys, right? This journey with you on this segment of my channel is also holding my earlier self when I was young, because no one did it for me. I'm speaking to that kid when I was early. I'm like, bro, like why can't you now help people of that age? You see what I'm saying? That generation. So that's what I'm doing. And connect with people in your circle as well and talk to them, break down that and speak to them, right? So that's what that is about, what I wanted to show you guys. Let me just open up the public portfolio for you guys right now. I hope you guys liked that little presentation that I brought to the screen for you guys live on the stream. Okay, let me get this up. Give me a second. There we go. Right? Let me come back on screen. Today the TV screen, the background's off for due reasons, right? Um, so yeah. And yesterday we were 11 and something. Don't worry. Although we are down $241, it doesn't matter, bro. It doesn't matter. Like I said, I'm a long-term investor. Overall, right? Everything is still green. And if it's not, it's awesome. That gives me another opportunity to buy in these companies and these stocks, right? But let's get into it because I have a call at 3 o'clock. It's 2:37 p.m. I have a meeting. But what I'm trying to say, guys, so recapping what we just watched, what I just presented, another, this stock has recently experienced, yes, it's peaking right now. I just put some skin in the game. And like I said, look at all these highlights. I just put $50. The $50 is made, but today we're just going to run through it. So Marvel Technology is something that I got into, right? It's today it's up 28%. Now, all the, like I said, disclaimer, I can't advise you. I'm not financially certified to do so. I can't advise you what to buy, hold, or sell. I'm just sharing with you what we are in. We are also in Big Bear. Yes, it's down today. We've lost $52. Again, I'm a long-term play. I see this company going to the next spot, $6, $7, $8, and one day maybe we'll open and it's 30, right? But scared money doesn't make money. But if you look at this $52, I've just eaten that loss. Forget these guys are small greens, but like if I keep on going up, I would have covered this cost. So let's just go. You'll see what I mean. But I'm a long-term player, right? Next, I'm also in UMAC, Unusual Machines, which is about the drones. Look this company up. Just made $2. But like I'm saying, guys, like I'm only $38. I'm showing you how I'm going to grow this portfolio today. What I'm investing today in this semiconductors. We were just talking about that, right? 61. Building out your positions, having skin in the game, teaching you the right things. Pharmaceutical, another great thing because quantum computers and science go hand in hand, in my opinion, right? But just build your position slowly and surely, right? Uh, let's show you. You want to be in space, UFO, great ETF to be in. So you're not just relying on SpaceX, right? You can get into these places now, and once SpaceX goes live, this even you'll see a peak. You see $4 up, Mars. But let's get into some money making ones, right? Now, cybersecurity, we're talking about that. There's another ETF you're in. Dollar cost average, keep on adding your shares and grow this account. See, we're $48 up. Now it's getting interesting. Now you guys are like, oh wow, okay, this guy literally knows what he's talking about. I said this is a beginner's portfolio. That's why some are 30, 20, not to overwhelm beginners, right? So great ETF to be in. Great ETF to be in my opinion. We made $234 on this ETF, almost 46, almost 47%. Sorry, we have $739 out of 739, 234 is profit. Again, guys, diversity. Although these are red, relax. This guy just covered the earlier loss and this guy. You see what I'm saying? That's how a business operates. Nike, I'm not stressed. Service now, right? Service now. We just have in this portfolio 3.9 shares, but we made $101, right? This is how Amazon. Every week there's an order going in. Every day, daily buy $5. Great. Long term play, guys. Amazon. SBMO, great ETF. How much have we made? $101. This 498. Weekly buys, $20 in the public portfolio. This is what I'm saying, guys. CRM, Salesforce, future proofing the portfolio, $26 in. $26 we made from this amount. That's it, bro. And these stocks are just going to balloon up, bro. Adobe, we were down, up now. Meta, $14, 602. It goes below 500, below 600, we are buying. Right? How much do we have here in Meta? 951. Right? I've been buying Facebook when it was Facebook since 2015, my first stock. This stock is supposed to go to 850. We're currently 603. Right? And recurring buy. So I think this is weekly buy of something is going in. So eyes closed, bro. Just keep on doing this. Great companies. Instagram, everybody's on it. WhatsApp, everybody's on it. Facebook, everybody's on it. Daily buy for $5. Okay. Do what you got to do. Nvidia. How much do we have in this public portfolio? Only 1.4 share. 313 out of 313, $53 we made. Bro. Weekly buy. $10. Keep doing your thing, bro. Keep doing your thing. TCAN. Google. We made $102. Right? How much do we have in it? Just 757. Only two shares in this portfolio. 102. Bro, beginner's vision of a portfolio. This is how it looks. And we didn't start with 10K. We started with $100, 200, 500, right? And it's making. You see what I'm saying? Microsoft, look here, bro. 792. We've only made $63, right? Look here. 600. They're saying that's 440, bro. Look, 95% buy, 5% more. I'm not telling you, it's right there. Microsoft has monopoly-like positions in various areas. There you go. Long run, bro. Long run, baby. That's where we're going. So these are companies, SCHD. Hardly anything. 10 shares, 325, $37. These are ETFs. Bro, I'm going to leave you with that. Invest now, today, for your better future. The future you will go back and thank you. You will thank you for doing this. On that note, peace. Make it happen.